not fall in love. I'd rather. Alright. Videos. How do I fix this? Oh my god. Load. Alright. Copy here. Boom. And here. Live. Everyone. Okay. How we doing? What happened, yo? How are we feeling, everybody? I don't trust the soul. I'd rather trust my bitch. That Bitcoin swing was fire, and it played out to the T. It failed the first 4-hour swing, but then nailed it to the T ×2 on the second one. That shit was bomb. That shit was bomb. I need to catch this. Perfect. Perfect. Time to clear all the charts. This is going to be uploaded. Don't you worry. Don't you worry. All right. Let's move this guy over. A little smaller. Okay. So, let's not overcomplicate this. Make this straightforward. Right into the point. Indices, from a higher time frame perspective, we're bullish as shit. We are most likely tomorrow, we're probably going to bolt and rip through all-time highs. I'm easily saying that on NQ. We'll probably get the same thing on the S&P 500. And then the Dow just needs to play catch up at this point. This thing has just been we're in a market maker buy model to all-time highs. And this will play catch up eventually. It's still within this weekly bullish fair value gap right now. The structure behind the Dow Jones is not as strong as the structure behind the S&P 500 and the NASDAQ. But again, I am not overcomplicating this. I want to see price take out all-time highs. I want to see all the way up here. We're doing a one-shot, one-kill to pass Apex or anything that can trade news on funded accounts for evaluations. Doing that tomorrow in my free Discord. If you haven't already capitalized or picked up some accounts with Apex, they're running the 80% off sale with code SNIPER. So pick them up, rip through them, get funded, then get paid. Let's look at daily charts on the 3. Now, the daily charts are where I'm a little bit this is just the whole grind up, at least from the tag of that monthly gap that we had on the Dow Jones, the failure to tag that monthly gap on the NASDAQ and the S&P 500. The whole grind up like this was very fishy to me. It was weird. It was a weird trend higher and a weird way to distribute, especially based off of how we had that Thursday daily candle. That was out of this world. But it ended up being clear with Friday's price as to how we expanded and we cleared and cleaned closing relatively higher. So with that, I'm just leaning to say that we'll see tomorrow's price, at least on CPI, trend back up. Like right now, we're trading into this 4-hour gap here. I'm assuming that we're going to hold this swing or even this swing low from Thursday from Asia and trend back up to complete our market maker buy model. Now, what am I going to anticipate after we take out those highs? I don't know. Is price going to just have a classic buy week and expand for the whole week? Or is CPI going to send it higher, create a wick, and then trade lower? I still don't know yet. All I know that I can say with confidence is that I want to see these highs and I want to see price expand away from this move. Maybe after CPI comes in, we'll get a read from that point on, but I want to see price take out all-time highs and then do whatever it wants to do after that. So that's my relative plan, at least for indices. It's a pretty easy and obvious set-in for the draw. We took out previous daily low already on the Dow Jones, yet failing to do so on the S&P 500 and the NASDAQ. If I had to give any sort of intention as to what price could do, is price on the Dow Jones could gravitate towards this low, create an SMT down here like this, while the NASDAQ and the S&P 500 fail, creating this sort of SMT like this, and then we get the pump that we need like that. So if I had to look at this from the intermediate term perspective, this is kind of what I'm looking at to see if we can create an SMT at this relative swing point and then price moves. But as of right now, the SMT is already set in running this low here. So even if we wanted to expand from here, I would totally understand that. So this is the current SMT, but if price wanted to dig a little lower and Dow Jones attacks that low, I'm also prepared for that as well. And also, I'll explain to you guys the paper trade that I took today with the Discord this morning from if you guys saw my Instagram reel. We could talk about gold too, but I'm really not. I haven't been a fan of gold in a while. We'll still go over everything though. So you guys know how unattracted I am to gold right now and why it may be like that. And for the people that are constantly doing analysis on gold, you're an idiot. First of all, this monthly candle has taken out finally the previous monthly candle high and the candle high from June. We took out both. And what did we do after taking them both out? Traded right back into the range. So if you want to continuously recede your hairline and develop gray hairs, have fun trading this dog shit, because I'm not. Now, gold is inside of this daily bullish fair value gap here, back inside of the range. What it wants to do from here doesn't matter to me. I don't care. Silver could trade away from this daily bearish fair value gap and attack these lows, while gold could do the same thing and get ran through like Bonnie Blue's box and rip through this gap here and attack this low relative to silver. So as of right now, I don't know what this thing wants to do. And CPI will kind of tell me at least the picture or how we're going to frame from this sweep of those two previous monthly highs. Damn, that Zen is actually kicking my ass right now. Brr. Anyways, let's look at majors as well. We had a pretty good read on majors when I sent you guys the analysis on Twitter, and I sent it on, I posted it on Instagram too, and I made a TikTok about it. So, monthly perspective, let me flip this because this is what I do when I'm looking and correlating it with dollar. Because I want to invert this just so that it makes sense to me in the eyes. So, as of right now, we have an SMT set in between GBP USD and dollar and euro being the stronger pair, like this, creating that higher high, failing to run that low from June the 2nd. So this is your current SMT that you have set into place, like this. Now, if we went to that daily chart, we called this out from this daily impulse leg that we had between the three. And we perfectly smooth ran it too. Like, it was actually amazing. We called it out down here, and we've had an impulse ever since. We have this down close candle here that ran these short-term lows, just like this. And also notice how fast I'm doing this, because I'm recognizing clean and clear, obvious price action. This is your order block. Price has expanded off of it, aligned with a bullish fair value gap. There's also SMT divergence within that gap too. If you look here, there is a lower low set in on the euro. There is a higher low set in on the pound, just like that. Now, I'll also neglect this big wick. I believe that this is a fault in the data or on my feed. So I don't think that this wick is actually present in price delivery. Correct me if I'm wrong, anybody. So now, as of current price on our daily perspective, we have this daily bullish fair value gap resting here. Now, within this daily bullish fair value gap, we actually have SMT between pound and euro here. So I think that CPI is going to send dollar lower, and it's going to send pound higher and euro higher, because we have this currently set in here. I want to see this daily gap hold. And I don't want this. I know we're trading into a daily bearish gap here, but based off of how the monthly candle is currently printing, I want this to continue higher, continuing in retrospect to its daily bullish order flow, or higher time frame bullish order flow. So I want to see this SMT hold while we trade away from these daily gaps on EU and GU. So if you guys have swing accounts, look to see if you could start framing anything from these key levels to then eventually, if euro can reach into previous weekly high. That would be the most ideal case scenario for EU. So if this thing could start trending higher, then that means that we just set in the hourly down close candle. If we close above this, that would be a great swing position from this hourly gap, and then start targeting all these failure swings above. All these untaken Asia highs, and then eventually the highs from here, 116,989. That's what I would like to see. Also, if you guys want me to do these regularly, we had a light goal last time of 200. I want to do a light goal this time of, let's say, 225. So if we can get 225 likes on this weekly outlook, we'll do it again next Monday. Because I just want to make sure that I can give my insight and show you how quick I can give the insight based off of what's high probability and what's not. And the more you see it, the more comfortable you will be, the more comfortable you will get in regards to identifying high probability versus low probability price conditions. Now, that's my plan, at least for euro, from the higher time frame perspective to the intermediate to looking for swings. We have crypto as of right now. We had this weekly bullish fair value gap tag that had SMT between ETH and BTC. And within this gap, we had a 4-hour nice forever model indication and swing from that weekly gap. We had the first indication of the forever model that printed here that got X'd out here, indicator plotted it. Then we had another one down here from this smaller down close candle. We closed above, retagged it here, and then price expanded higher. So technically this would have been the low risk buy. And then we had another one set in here for a stage of accumulation when we closed above this down close candle that ran this short-term low. Indicator plotted it here, and we ended up trading higher, reached a 1-to-1, reached a 1-to-2, and a 1-to-3 risk to reward with the external highs, aka all-time highs, still intact, being able to be reached for. So maybe we can get a daily bullish fair value gap tomorrow. This is a pretty nasty daily close on Bitcoin, but we will end up seeing how this maps out, how this plays out, and if price wants to continue higher from here. There is a daily flat body low from this open here, so we'll see what happens next. But as of right now, what is the most clear thing is indices. If we can trade higher from this 4-hour swing, and if we can get a drop lower maybe overnight from Asia or London, taking out the Dow Jones low from here at 43,901, and then we hold that low on NQ, hold that low on ES, and then we hold that SMT. This is just more accumulation stages of the market maker buy model for us to then reach these resting highs here. Now, that is like the analysis aspect and how I'm deriving where price is going to go to. I wanted to show you guys the trade that I called out live today this morning. I'm going to replay price just so you guys can see everything and kind of go over what the thought process was for the day. So we could zoom this in closer. I didn't take this on any of my live accounts. This was literally just a day where I said to my Discord, I was like, we're going to tape read price today. It's going to be like a little lesson. We're going to go through timing and just see if we can call out price where it wants to go to, even on a no news Monday with a high impact news driver the next day. So coming into the day, we had a 4-hour bullish fair value gap that was tagged. On the NASDAQ, we had a failure to tag that same gap on the, the S&P 500, aka also just creating an SMT at the correlated lows, as you can see here. So lower low, higher low. That was the first originated SMT. And the same thing with the Dow. Boom, like this. So that was the bias going into the day. With going into the hourly chart, we had untaken Asia highs. Now, I took this trade on paper, framing it from a hourly to an M5 perspective, because the M5 structure was just more clear for me to take a trade based off of the timing of how the market was reacting. Now, if you look closely, you can see how Asia was all relative equal highs on the Dow Jones. Pretty much failure swings like this, and failure swing here. And same thing with the NASDAQ here. There was no SMT or just untaken liquidity at a session high. So seeing that was like, all right, cool. Now I could take a trade. I have a clear dawn liquidity. Maybe I could see if I can catch price and see if it wants to do anything in regards to some sort of possible setup. So here's 6, 7, 8. Here's 8 o'clock. Now, this is right before equities open. We have no news on this day. So therefore, if we have no news, what does that mean? We have to wait for 9:30 to provide me some sort of indication as to what to do next. Now, at this time, we had a SMT divergence inside of an hourly small gap here, like this. We had the NASDAQ failing to take out this resting low here, while the Dow Jones took that out, just like this. And we had the same hourly gap on the S&P 500, tagging that while also failing to take out that corresponding low, just like this. So I'm just going down the line on time frames and just framing to see how can price move. Now I'm going to go to the 5-minute chart. I'm going to look to see what is happening next and what could further be done in order for me to depict when I could even possibly get into a trade here. So boom, there's Asia highs above here on the S&P, and here is the Dow with the relative equal highs above at Asia. Drag that out here. Now let's skip to our time. 9:30 is what we need to wait for. So let's skip a little bit in price. Boom, right there. So here's 9:30. Let me skip one back here. 9:30 is in. Now, let me delete that, clear that out of there. So let me clear this out too. At this time, we have now this correlated low here. Boom. Higher low on the NASDAQ. Lower low on the Dow Jones. Just like that. So we have a set of SMT placed in at a key time, 9:30. So at this time, I need to know, is this a manipulation or is price going to just trade lower from here? Now, in order for me to know if this is a manipulation in price, I need to see price close above this down close candle here that ran all the short-term lows, because if we close above it, that is our order block and change and save delivery, because this happens at a key time. It clears the liquidity pool and it creates another stage of SMT divergence. So seeing this, all we do is wait. What are we waiting for? We're waiting for price to close above and react. There's that 5 minute. We had a pretty decent reaction there. We closed right at the opening price of that down close candle from the S&P 500. So there was nothing just yet. Now skip another 5 minute candle. Boom. We close above that down close candle resting right there. But we also did a closure above this up close candle here, which is labeled as now a breaker block. And if you watched my last YouTube video where I provided the lesson on how I execute my trades, you would know that if price energetically explodes higher, like past our order block, or we don't have an inverse fair value gap, they're a good reference here, I would be taking the trade off of the breaker. Now, if I go here, if I go and show you my paper trade that I took and where I got in for the execution, I'll show you guys basically after. But I put my limit in at this up close candle there. I have my stop loss relative to this, like 50% of this down close candle that covered the order block. So even if price wanted to come down lower and tag that order block, I would have been fine, because I would have had still a decent amount of drawdown to deal with. So I was just targeting all the way up here for Asia. And I said even in the Discord when we were live that partial points could be taken at these highs here or at London highs here. So if we play out price a little bit more, next candle here tags you in, and it tags to the tick of that down close candle, the order block. So you would have been in there, while at the same time, the Dow Jones is just giving up the ghost here. Like, we are just melting. But I'm fine with that, because NASDAQ is showing me relative strength, so I'm cool. We had the S&P 500 close above this down close candle, so that's also order block there, but I never execute on ES. I'm always going to be executing 99% of the time on the NASDAQ. And if we keep on playing out price, we had a little bit dig lower, but that's okay. We're still active. We're still in. Next candle, nice displacement higher, and then we just keep on kind of consolidating. No news day. It was pretty slow in regards to how is price moving and delivering. At this point, when price ran those London highs, that was me telling them if anybody took the trade on like a live account or an evaluation, you go break even, you would have partialed out of the trade, you would have taken out at least like 75% of the position or 50%, and you would have just waited until the last runner went to 23,773. But then next candle, we kind of get chopped around, it gets slow, and then I believe this sends one candle that stops out break even right there, creates another set of SMT between the NASDAQ and the S&P 500 here, like that, and then it ends up cleaning and running to the Asia highs, just like this. Where is it? Right here. No, no. There. Now, here. Next 5 minutes. Boom. Yeah. So, yeah. We take out Asia highs on NASDAQ. We take out Asia highs on the S&P 500. Just no news Monday. Super chopped. Super slow. Weird delivery. But that was exactly how I was reading price this morning. Pretty much just waiting for a manipulation to occur at a key time. We had 9:30, trade lower. We created an SMT. Closed above that down close candle, closed above a breaker, confirming that. We had clear, obvious drawn liquidity. Price eventually reached it. We took out London highs, managed the position accordingly, and it ended up reaching the final destination. Did that make sense to you guys? Even on a no news day, it's pretty obvious how you could depict where price can go and how it can go to certain points. It's legitimately exactly like it's the same process every day, every single, no matter what it is, always waiting for key times, always waiting for manipulation, waiting for price to confirm that the manipulation just took place, and then you take the trade. That's it. It's literally it. It's all we do, Monday through Friday. Damn, Liberator, bro. Just today. Let me see if can I show and turn on these executions. I think I have to. I have to get out a replay. Yeah, like here, like I bought here, and then I mean, since it didn't matter to me because it was a paper trade, but if I was taking this on my live accounts, then I would have taken a piece off at London highs, and then went break even. So I would have at least had a piece of the pie out, but it doesn't really matter at this point. But regardless, that was the exact trade and why I took it. Oh, because I'm not doing anything relatively. I literally made the decision to trade to make today a paper trading or tape reading session because tomorrow is CPI. If price offered anything or if we did anything, it's still value to like get your reps in, but I still didn't want to risk anything on any of my PA accounts or my live accounts. So I just hung back, did like a little lesson for the day for the group, and that was it. I didn't have the urge to risk anything. Neither did I have any FOMO, even though I didn't take the trade. But again, like that just comes from experience because I know that I'll get an opportunity this week. You have to watch my last Instagram reel. I show you guys. I took it. But we'll have to wait to see tomorrow as to how price ends up treating us from where we're currently trading at. So let's see how tomorrow goes. And with the data release, it should give us a nice read as to what we are doing next or how is price going to be delivering for the rest of the week. And I'm leaning completely towards all-time highs. That is my current bias and my read as to what I'm looking at on price. I basically wait for the data release to come about, and then I go live at 9:15. And then what I want to see is based off of how news came in, I will then watch to see if I could frame a trade prior to 9:30 if we're going to be playing a continuation based off of the data release, or if the data release was a manipulation and then 9:30 plays the reversal factor, taking a trade targeting the data high or the data low from where CPI is set in. I'm very, very patient in regards to these high impact news days. I definitely don't look for trades right after the data release. I give it at least a 30-minute wait period to when I go live at 9:15 for then looking for a trade. Or if I don't have any read after the data release, then I wait for 9:30 to then provide me some sort of indication as to what price will do for the continuation of that day, if we haven't already reached the liquidity pool objective yet. Don't know that yet, bro. No, don't know that yet. Last week, I legitimately had one trading day. I traded one day, and it was Wednesday. That was it. One day. And I was completely fine with that. And I lost that day. I didn't give a fuck. I had one trading day. That is it. And I'll tell you right now, August is going to be like this. It's going to be slow. It's going to be boring. And it'll be a big tell as to if you can survive in conditions where you have to wait. If you literally take trades every single day, you will get eaten alive. I'll promise you that right now. If you can't go a day without just accepting that the market is not offering an opportunity based off of your entry model criteria, you're going to get fucking wrecked. And I don't feel bad about it. You need to legitimately cherry pick every single possible setup and wait on your hands. And if it takes days, so be it. And if you sit back for a whole week and you don't take a trade, so be it. Should not matter. The fall months are much better in price delivery, and you make a boatload of money. August, historically speaking, is one of the worst months in regards to price delivery. And you guys need to understand that, and you need to accept it and just wait for your time to shine. I did the NQ recap. Just rewind the live. I literally just went over it. August last year was shit, and the previous August was also shit. So don't be surprised if this one you're catching a ridiculously less amount of trades. Because I know that I will be. But I also only take trades from the 5 minute and above. I don't go anywhere below that. So for evaluations, let's say you're trading like a 150K Apex account, max contract 17. If I'm coming into the day and I am going to like look for a trade, like let's say I go in, I turn on my one shot, one kill protection pad thing. I'll go in and I'll just create an order like this. I'll do buy stop here. My TP needs to be 15K. So like this, just like that. 15K. And then I go like this. Sell stop. TP 15K. Like that. And then right before the data release is dropped, I go like this. Boom. Like that. Drag this. Boom. Like that. And price either hits and runs one side. So the second that I hear the release and price comes in, the second that one side gets tagged, I close the opposing. So if we trade higher, I will immediately go like that, and then I'll see if this passes, if it hits TP. And my pad, I believe this is at 25 points. I have it at 20 points. 20 points? Or you do 25? Apex does not have a consistency rule on the evaluation. Top Step does. Based on, so that's why whenever I say like guys pick up the Apex 80% off deals going on right now, so just run with those or funded next futures. So based off of like from my experience, like first of all, if we're just accounting for this year, keep in mind this year has been funky. Why has it been weird? Because Trump got inaugurated and he came into the office like ever since like I'll probably say ever since April. Price action has been weird. And why has it been weird? Because typically April or like May, June are good. But like this year with Trump and how it's been with the war, with the bombings and the tariff deals, it has been a huge, huge difference based off of when Biden was in office. And those months comparing to these months has been so dramatically different. So dramatically different. But our job as traders is to adapt and react based off of the current price conditions. So, given the fact that like we've been going through so many crazy world events, I can't say that from this year that these months are better than these months, because it's kind of all based off of what is going on in the world. Because that will really determine if price will be good or not. Because the sentiment a couple months ago was just like so much uncertainty based off of like, we don't know if we're going to have World War III. We don't know what Trump is going to announce in regards to the tariff deals with other countries. And a lot of the shit has just been a lot of skepticism and uneasiness in the market. So that's a huge factor and a big play on, because like I said, last year's months are completely different than this year's. But I'll tell you right now, August is not. August is still going to be probably slow and trash. But stay patient, rock with it. Fall should be better, and everything should ease up at the end of the summer. Or exactly like you said, our job as traders are to adapt and react based off of current price conditions and how everything is currently treating us in the world. Got it? You don't swing futures on what's it called? On Forex props. Like you swing what? Like you don't swing futures unless you have a personal account, like a personal account that you deposited in. You know? You know, but based off of the current analysis, are you guys on the same page? Are we viewing everything different? Are we viewing everything the same? Type 1 in the chat if you are viewing price the same way as me. So 2 people out of 80. Type 2 if you're lost. Yep. If you want to take a swing on EU, so be it. Why not? I think EU expands higher for CPI. And I think dollar gets crushed. I think dollar melts. And attacks these relative equal lows. And if it shoots higher, if dollar shoots higher and euro dumps, it's not my fault. Happy to hear that, brother. Yeah, I mean, is this your first evaluation account, or like your first potential funded account? If it's your first potential funded account, then I wouldn't say one shot, one kill it. But if you don't care and you don't care about losing the money, like here's the thing. With one shot, one kill, if you're profitable and like you've gotten payouts and you make money from trading genuinely, you should not be taking you should be either passing or failing these fucking accounts, like max leveraging them every single time you try and trade them. Like there should be no way around it. If you're taking like months to pass a evaluation account, then you need to reconsider what your trading is like. Like you should not be treating these 50K accounts like it's your own personal 50K funded. you should be putting heavier risk, trying to pass them as soon as possible if you have the money and you can afford it. But if you don't, then take it slow. Treat it like a funded account. And however long it takes is however long it takes. Just all you're doing right now is trying to stay consistent in following rules and following a system. And over time, that account will be passed, and then you'll have the same sort of mindset going into when it's funded. So you'll be fine. You will be fine. Just if you have the money, get it done fast. If you don't have the money and you're working jobs and your money that you're making from your jobs is equally distributed to where you can put money back into these evaluation accounts, just take it slow. Yeah, it's a 40% consistency rule on funded next futures. 40%. 40%. But this was a good live stream. This was nice to do another walk through, discuss price top down as to our thought process going into tomorrow with CPI. Again, if we can get 225 likes on this live stream, then next Monday I'll do it the same time, same thing. I just want to make sure that if my analysis can match your guys's, that's a good sign. You guys are in the proper direction. If you did miss the earlier parts, just rewind it, rewatch. But I hope that we get some clarity tomorrow. We get some good setups, and hopefully we can get a nice play on for indices and foreign currencies, primarily euro. That'll probably be the best. That'll probably be our best bets. Higher on both markets. That is my plan. But I hope you guys all have a great rest of your day. Again, if you haven't picked up any Apex accounts for One Shot, One Kills, if you're going to do it, we're doing it in the Discord tomorrow at 8:15. Nick will be hosting. Pick up those accounts, code Sniper, and then, yeah. If I have any trades, I'll upload them, have another recap. But be safe, guys. Good luck, good trading for the rest of the week. And I will talk to you guys all later on. Be safe, everybody.